I'm Sarah Myerscough, and this is the Insurance Brokers Podcast, where we're talking to the personalities and the businesses that sit behind our industry. If you like what you hear, please hit subscribe on your chosen podcast streaming platform. Good morning, Jonathan. Thank you very much for joining me today on the Insurance Brokers Podcast. It's really lovely to have you here.
Thank you for inviting me on, Sarah.
So we first met at an event last year, and I've been harassing you to get you on the podcast ever since. So I'm really grateful that you've agreed. Our conversation today is quite an interesting one, and I'm looking forward to learning from you. And we're talking predominantly around the high net worth market and some of the challenges that are kind of, I want to say, bespoke to 2023. I'm sure we've seen them before, but there's some quite things going on in the world that are changing various markets. So I'm really looking forward to learning a little bit about that. But before we do, tell me a bit about you. Tell me who Jonathan is, what you do. Introduce yourself.
So I was one of the founder partners of Protect Underwriting about 6 or 7 years ago. We started it as a new business, new underwriting business, and that's gone very well to date. And my history is, I guess I've been in insurance for the whole of my career, so 25 years plus. Insurance through and through.
So tell me a bit about Protect.
So we started as a very focused specialist underwriting business, sort of boutique-led, I guess, if you want to call it that, focused very much around providing service directly to brokers. But then alongside that, obviously still providing a great service to the policyholders. And if we can get those two bits right, then we think that brokers will show us more business and we'll build a good portfolio with them. And that's proven to be pretty correct. Obviously, we continue to work on developing the products and the solutions and adding new lines to us gradually.
Fabulous. So we're talking specifically around the high net worth market today. I suppose high net worth, fine art, big umbrella there. Can you tell me about what sort of things are happening in that market today that's, I don't want to use the word unprecedented, but things that the big movers you can see, that are the challenges that are happening in that market?
I guess the hot topic at the moment is inflation and the effect that has on policyholders around underinsurance and the challenges that presents to everybody at the time. The most important time is when a customer has a claim. We're clearly seeing the cost of claims going up, but also the timeline of putting people back to where they started. I think you know from personal experiences, if you try and order something from a builder's or even sort of white goods and kitchen goods and things like that, it's taking a lot longer to come through. So I think that that communication challenge is the big one we see from brokers. It's how do they engage policyholders in thinking about what are the correct sums insured that they need, and actually helping them to evaluate that and make sure the policy is fit for purpose for them.
It's pretty difficult because at a time where the cost of living is increasing, the cost of insurance is increasing outside of the fact that you need to then increase your sums insured and things like that. How do they have those conversations? Because this is a conversation I've had with a few brokers. Is there
it's difficult. I mean, we've also had rate rises going through in the market as well. There have been losses. There have been an increase in complex losses. So, rate rises have been coming through in our market. And I guess now we're probably seeing more around just underinsurance. So I said the tricky thing for a broker is to explain to a customer that they're actually buying more, they're buying more cover, or they need to buy more cover. So it's not necessarily about insurers wanting, us wanting more money. It's about making sure that the cover goes up, and unfortunately the price goes up with that. So you're right, in economic difficult times, it's a challenging conversation, but I think most policyholders still want to get their insurance in the right way, and they want to get correctly insured. So I think that's the good thing about this, is that you try and have a conversation about what does a policyholder actually need.
There's always a lot of talk about underinsurance and the consequence of, and I hear a lot about underinsurance in insurance circles, but it's not the insurance circles that need to know about underinsurance. How do we to get that message out to the policyholder, particularly around high net worth, fine art, all of that kind of area? How do you get that message out?
I think, in a lot of our areas, people like talking about their assets, what they own. There's a natural interest if you're somebody that collects a lot of watches or collects art. There's often a natural interest and appreciation that the values are going up. And, that's a great thing for our policyholders. And the same, with their houses. If they've had any work done or building works projects done, they know the cost of things are going up. The tricky thing, I think, for brokers sometimes is how do they create a conversation with their customer? Insurance isn't that exciting, as you say, for people outside of the insurance world. So, how do they make sure that customer is engaged and prepared to talk to them at renewal? I think brokers, that's a key role for brokers. Brokers have to be confident about what they're providing. They're not just providing a piece of paper and a premium attached to it. Part of what they provide is the service and the engagement and that education piece. So they're actually providing real advice to the customer. And I think a lot of customers get that. That's why, the high net worth market is still a broker-led market and is still flourishing and growing. The rich seem to be getting richer. They have more stuff to insure. And so, the market continues to grow healthily.
Have you got any things that you've seen during your day-to-day life over the last year that's kind of surprised you in terms of somebody's, I don't know, a story about underinsurance or a story about a particular claim that was particularly difficult to kind of highlight some of the things we're talking about?
Yeah, I think we see it every day. I think one of the biggest challenges for brokers is to get the correct information from policyholders, to get that level of engagement. So, really trying to dig into what's going on with the policyholder, what's their security like, what's their lifestyle like, are they leaving, if they've got multiple properties, are they leaving some of those properties unoccupied for large periods of time? Who do they have going into the property? Because we have as a market seen large losses, particularly from escape of water. We had the July 21 floods. We've seen some very high profile other flood situations. We had the freeze in December. There are lots of, whether they're climate change or just circumstantial, building regs changes. There's a lot going on that's causing losses, and some of these losses are very substantial. And I think perhaps as we came out of COVID, we saw an increase in things like jewellery losses as well. People started travelling again, doing some odd things like checking lots of jewellery into a luggage bag and sticking it in the aircraft, which is not best practice. So yeah, there's lots of stories, I'm afraid, out there. Perhaps that escape of water one. We saw one just the other day where we've had one customer that's had a leak or had some damp in their house and haven't been able to trace it for ages, and then finally they traced it to actually a leak from 2 doors away from their own house. And so we'd had a number of specialists go out, and so it's, just all these knock-on effects of these things can be significant.
I did a really interesting podcast with Miller Insurance,
yeah,
specifically on escape of water, and it's fascinating how damaging it can be.
Horrible for people, really horrible if it happens to them. And as I say, not often a quick solution. However much money we throw at these things to try and rectify them, not always a simple solution.
Total personal anecdote. We've had a dodgy builder that's wrecked our house that we're currently trying to deal with. And one of the things he's done is he's put a new window in my daughter's bedroom, but where he's messed up the roof, there's water coming into the cavity behind the wall. So the wall has turned to powder.
Oh dear.
And I looked at it and I thought, what is that? Is there something wrong with the paint? And when the structural engineer came round, the latest structural engineer for the 900 billionth time, he said, no, there's water going into the wall cavity. I have no idea what consequential damage that will cause, but it is what it
Yeah,
is at
it's
the moment.
it's painful. As you say, sort of standards of building work are not always great. Um, People forget to tell their insurance broker that they're having work done in the first place, which leads to complications. So that's a big challenge for brokers. And then, the nature of that work and some of these projects are very ambitious as to what people try and achieve, and then problems come out afterwards. Insurance isn't a maintenance product; it's there for fortuities and unexpected events. So that then does lead to some complexity as to how you get it fixed and who's going to pay for it.
Yeah, the latter is
So I
my
wish you
current
well with
problem.
your project, but
We know how it needs to be fixed. The whole thing needs to be demolished and restarted, but
yeah, so it's
different
expensive
story.
and painful, isn't it? And it's the disruption as well to people's lives. That's the
Yeah, it is. It really is. Just changing slightly, but there's a link here. I did a podcast towards the latter end of 2022 with PIB about the regulatory changes coming in around consumer duty, and I'd be quite interested in specifically how this affects high net worth fine art clients. What are your thoughts on that?
I think consumer duty is a good thing. It's a direction of travel from the regulator. I think for most of the high net worth market, I would say that we're already extremely focused towards customer outcomes, but obviously we've got to make sure that we can demonstrate that as a board, as a company, around our product governance and the service we provide. We already collect a lot of data, conduct data, to make sure that our policyholders are happy with our product and that we're providing good value. But we're looking at, it's a good opportunity for us to refresh some of our product, to make sure it's easy to read and that it flows and that the coverage is clear. So it's a challenge for our industry. All of these things take time, which again is valuable and important to us. But I think I don't think for the private client market it would be a painful experience, because I think we're already delivering a great solution.
What's your top 3 questions that you get from brokers, and consequently, what's the top 3 pieces of advice you find yourself giving to brokers in today's market?
Yeah, brokers want more engagement with underwriters. The risks are complex, semi-complex. There's always something unusual about them. So we see quite a lot of frustration from brokers with some of the service they get from some of the major insurers. So that's why we and other smaller specialist boutique insurers are doing well, because we can give that attention from our underwriter to broker to deliver something that's right for the customer. I think brokers do a great job, when they can get engagement with the policyholder and really provide advice and ask the right questions. Then I think that's a massive win for us and for them. There's a big pressure on everybody to be more efficient. So whether that's around just the quality of the paperwork, the premium and the data and everything moving around. So I think we'll see that that continue. Both so brokers internally are under pressure to deliver, what's the phrase, more for less, and insurers certainly want to be more efficient. And that ultimately again can help us all as an industry. And then I think probably the last thing is just to accept change is a constant. So it's been like that for the last 5 years. We've seen some new entrants into the market. I guess we're a bit older than that, but we've seen people like Brit and GJW come in, doing a good job. We've seen other companies come and change as well. Aviva have clearly put a big stamp down on the market, bringing in AXA Art, Azure now. So there's a lot of change going on there. Different insurers are different to how they were 5 or 10 years ago, and they will be going forwards. So I think smart brokers are aligning themselves to people that provide service to them right now, and will do in the future.
I think you've just answered my final finishing question, but you might want to add to it. Next 3 to 5 years for the high net worth market, what's your prediction?
I think more growth, more of the same. I think it's a good market. Underwriters have struggled to make money at times over the last few years. I think there is pressure for underwriters to deliver good results. But I think, ultimately we've got a growing customer base. There are more people out there with more complex insurance needs and growing assets that need to be insured, whether that's their first home or their third home, their art collection, their collection of something completely unusual. These are all things that need to be insured that won't be insured in the sort of direct online aggregator type market. So I think it's great. The rich are getting richer, and assets will still need to be insured.
One of our clients does a really interesting podcast in this space. I did not know trainers were such a collectible item.
Yes, yeah. Well, I even we've insured a trainer collection in New York. I won't quote the number, but it was north of $5 million, and I thought the guy was going to have hundreds, if not thousands, of these trainers, and there weren't. There was a dozen pairs of trainers.
Just insane.
Yeah. But they're they're treated like pieces of art now, really. So if it's collectible, then and someone can put a value on it, then we can insure it.
Amazing. And
it also comes down to the same basic things of how are they looking after it, how are they protecting it, securing it. There's some incredible sports memorabilia and things out there now.
I just cannot imagine having a desire to collect trainers. That obviously says much more about me, I suppose, than anything. But it's insane.
It's like all collections, isn't it? It's very personal to people. But things like that trainer market. Yes.
Is Lego a collectible item?
I understand so, but I suspect the values aren't quite what sort of trainers and comic books and things are. I guess it's perhaps not as scarce.
I mean, I love Lego, so I could see that. Anyway, digressing.
That's got a rarity, scarcity value, I guess, can ultimately can go up in value and be insurable.
If you were to win Euro Millions this Friday, what would your collectible item be?
Oh, goodness. I don't know, actually. Good point. Probably art, I suppose. I think. Yeah. When you go to some of these art galleries, it's very inspiring to see lots of interesting things are there. Although I have to say some of the prices are still shocking, even if you did win the Euro Millions. But maybe a few other things I'd to spend most of my money on first.
Harry Potter Lego, that would be mine. I want Hogwarts at the moment, but again, a different story.
I think if you won Euro Millions, you could fill your whole house with Harry Potter Lego, no problem.
Oh, there's a dream. Jonathan, I'm really grateful for your time this morning. Is there anything else you'd like to add before we sign off? Because I'm again learning things every day, and I really appreciate your time. No,
it's been enjoyable to talk to you. Thank you for your time, and I'd be happy to answer any follow-up questions that people may have.
Wonderful. Are you happy if I put your details in the show notes so anybody that's got any questions or looking for a underwriting partner can get in touch?
Yes, of course. Yeah, that'd be great. Thank you.
Super. Thank you very much.
Thanks for listening to the Insurance Brokers Podcast. We'd love to hear from you, and don't forget to subscribe on your chosen podcast streaming platform and check us out on YouTube.